There are several different factors conspiring to bring about the current price of oil, but there is this most recent news of those strikes against the Yemeni-based Houthi rebels around the problems that have been happening geopolitically in the last several days or so. The United States and Britain having confirmed that they have hit targets in the area. Now, what this has done is this has had the effect of diverting what would otherwise have been oil cargo through the Red Sea and extra costs, of course. And we are looking at what's happening with the markets particularly, but there are other factors for the price of oil as well. When you consider that yesterday's slightly stronger than expected year-on-year CPI figure might put a dent in demand, and that's a negative for the demand side, but supply is being constricted because companies aren't producing enough oil. They don't seem to be willing to put the investment into new exploration to bring about new oil. There's environmental pressures as well as economic pressures as well. Let's take a look at the price chart because both Brent and WTI are moving exactly the same direction. Brent here, I want to show you this symmetrical triangle first of all, because I want to set up a trade to potentially give you money based on the technicals here. The symmetrical triangle, I've measured the height of this where it's touched on both sides. And that's given me this dotted line here, which I've replicated, which takes us up to 86.50. If you're long on this at 79.61, there is the potential technically to make up that difference, which would help us. And you put your stop loss below the underside of this falling line of resistance, which is now support, of course, with this candle here. But in addition to that, I've also drawn on here this Elliott wave, the 5-wave impulse is now being met with a reactive wave, which has come up here, which I can show you 1, 2, and now potentially 3. And that, I think, would therefore confirm that price point at 86.50. So you've got two big, strong technicals which give you that. Then ultimately, of course, what happens with an Elliott wave is then you get the big move down, which would then be another 5-wave move lower, and that would take us on well down. Where that goes remains to be seen, but I'm only concerned with the immediate aftermath of what's happening technically here. If you overlay what I've just told you in Brent on WTI, ditto, exactly the same thing. Break higher, symmetrical triangle up to 7,800. That's your price target. It's a 200-day moving average, and exactly the same thing with this 5-wave Elliott wave impulse on the way down. You've got the 3-wave recovery, which gives you a price target of 78 for US crude.